Talk about HDFC Life's performance, and who better than the MD and CEO herself joining in on the show right now, Vibha Padalkar, to walk us through how the quarter went by was, and of course, what's the future visibility as well looking like. Vibha, great to have you on the show. Thank you so much for joining in. Hope all things well.
Absolutely. Thank you, Aisha.
Thanks so much. Vibha, I can see from your earnings that it's been a very steady quarter for you, 23% APE growth, 30% VNB, but at the same time, your profits have dipped about 26%. Walk us through what were the key highlights, the highs and lows of the quarter gone by.
Right. Yes, while we had a great set of numbers, whether it's top line, market share, even the claims, but what we decided to do in this quarter is that to add to our existing claims kitty. If you recall, we had set up a claims reserve of 700 crores in quarter one. While that was more than sufficient for us to take care of the claims that we have received in quarter one and quarter two, we decided to further enhance it, just given that we are not out of the woods yet, and by 60 crores. If you were to back out that number, then profits are would have increased by about 13%. That is number one. Number two is that when you look at our embedded value and the VIF, the value in force in that is nothing but addition of new business profits that we have added to it, and that has grown by about 28%. So over a period of time, the VIF, all things being equal, should unwind to Indian GAAP profits. There is a little bit of time lag between writing new business and it unwinding to profits, and that's what you will see. But when you triangulate that with new business margins being healthy, embedded value growth being 23%, I think there is no cause for concern.
Sure. Vibha, the markets have seen a sharp recovery, barring, of course, what's happened in the last 4 trading sessions since July onwards now. What is, if you could just highlight the key trends that you're seeing across your product categories, especially the annuity business?
Yeah. So our annuity business has done very well. And this is a space that we have been very, very focused on and have been talking about it. So we've seen a 47% growth in annuity business. And this is when industry has been close to flat. Actually, it grew by about 1%. So that has been very good. Also, our market share in annuity has gone up from 7% to 10.3%. In terms of the product mix, we are known as a company with a balanced product mix, and we are reasonably careful to keep it that way. Like you mentioned, with the markets, there has been a natural pull for unit-linked products, and we have stayed away from excessively going down that path, because in the past our experience has been that if people don't understand the product well, then they could enter the markets at a high and then be somewhat disappointed. So our unit linked as a percentage of total has been 26%. Participating has been 30%. Non-par has been 32%. Annuity 5%, and protection 7%. This is as a percentage of our APE.
Sure. Vibha, I must compliment you that your product portfolio has excellent schemes such as Sanchay Plus that we were just chatting about. But tell me, what's the product strategy now going forward into the financial year? Any such new innovative, lucrative schemes that you have in the offing?
Absolutely. The newest kid on the block is again one in the Sanchay Plus, in the Sanchay stable, and you'll hear about that shortly. Also, our the product that we had launched early on in this financial year in terms of Click to Protect Life also is seeing a lot of traction. So these are products in the sense that they are focused on protection, or they are focused on some level of risk management as far as interest rate transfer is concerned. The way we look at product strategy is that transfer of one of the 4 kinds of risk, which is mortality, morbidity, longevity risk, and interest rate risk, or a combination of these, is what makes it a win-win product, and that's what you've seen that in terms of product launch. So a Sanchay Fixed Maturity Plan is the newest kid on the block. and that has a lot of interesting features which we will be launching to the public very shortly.
Great, can't wait for that. Vibha, as I look at it, your solvency ratio has gone down to about 190%. What is your need for capital raising going forward? Are you already looking into it?
Right. So typically our solvency ratio has been in the region of anything between 185% to 200%. So it's very much range bound, and we haven't raised capital for the longest possible time, except for 600 crores of sub debt that we raised a little while ago. We do not require capital as of now, except that as and when the Exide Life approvals come through and the share transfer happen, there is a cash component, and that will take our solvency down by about 13-14%. We will take a call at that point in time as to where are we on solvency, what is the dividend supportability, and then decide on whether we want to further strengthen our capital. But on a standalone basis, there is adequate capital. And the reason, just to complete that, the reason for it going down from about 203% to 190% is largely because we paid a dividend in quarter two, which reduced the solvency capital.
Okay. Just some numbers, since you just highlighted Exide Life Insurance as well. With that acquisition, your EV is expected to cross about 30,000 crore rupees. We understand that the growth in embedded value has been very strong at 23% on a year-on-year basis. Just highlight for us what this acquisition could actually mean in terms of your balance sheet growth going forward.
So on most metrics, it will add about 10% to whatever, whether it's in terms of embedded value, whether it's in terms of top line, whether it is in terms of market share and so on, except to agency, where in standalone agency, it will add between 35 to 40%. So that's how we see this. And this is just mathematical addition. Now, obviously, any M&A that we would do is also to extract synergies and to fuel growth by combining of the two entities. So we would expect to see those synergies once the acquisition comes through.
Okay. You know what one has seen in the second quarter so far, at least, Vibha, from all the banks and NBFCs which have already come out with their earnings, is that the level of disbursements is actually seen picking up. Just wanted to understand from you, how is it that you see the contribution of bank partnerships in the overall distribution mix and the key changes in the distribution mix panning out going forward?
So this is in two ways. On the individual front, we have seen a good traction of about 20% growth in business that has been contributed by bancassurance partners. However, really the big one is in credit life, which has grown by 108%. And that's where it has been quite a meaningful growth on the back. To your point, whether it is NBFCs, banks, small finance banks, that is where the traction that we have seen, wherein H1 has grown by.
All right, that's the management of HDFC Life talking about the performance in the quarter gone by and the prospects for the future. And that brings us to the end of this edition of The Market from the team that put the show together.